Hey, it's Rick Brinkus with Keller Williams Realty, The Marketplace, and we're here again with local attorney Kyle Wallace talking on our series on short sales. There's a lot of good information out there and some misinformation, and we want to just kind of try to set the record straight. So, Kyle, one of the questions that we hear, or a term that we hear when we're talking about short sales, is a deficiency judgment. Can you define what a deficiency judgment is when we're talking about a short sale?
Yeah, absolutely. Thank you, Rick. It's actually a question I get quite often with short sales. It's the most common question, which is, what's a deficiency? And can the bank pursue me for a deficiency? And the answer is, simply, in a short sale where the bank agrees to take less than the road, they may have the right to come after you for that money.
Okay.
Right?
So they may have the right to go ahead and do that. Is there a chance that either an attorney or a real estate agent may be able to negotiate with the bank so that the bank agrees not to pursue that deficiency?
Yes, absolutely. And that's why I use the word may, right? Because it's negotiable. And that's the great part of a short sale, is that you as the seller or you as a real estate agent gets to work with the bank to work out those terms. If they want to pursue deficiency,
excellent,
right, or they want to waive deficiency, you're going to know before the deal's done.
Okay. So could you make that as a seller to feel a little bit more comfortable with the whole transaction? Could a seller make it contingent upon the bank waiving the deficiency judgment? Could they make that one of the terms of the agreement?
Yes, they could make that one of the terms of the agreement.
Okay, excellent. So that would help relieve a little bit of the stress. The other thing that we've heard, and we've heard quite a bit toward the tail end of 2012, was about tax consequences. Are there going to be tax consequences? Aren't there going to be? Is the Mortgage Debt Forgiveness Act of 2007, is that going to be extended or not? Could you elaborate a little bit more on that? Are there tax consequences or not? And how does this Mortgage Debt Forgiveness Act of 2007, how does that play into a seller's decisions today?
Yeah, absolutely. Thank you. So the first thing I will say is always consult an accountant or a tax attorney. If you're in that situation, because you want clarification on this. But the general rule, and I'll talk specifically about the Mortgage Debt Relief Act of 2007, which carries through till January 1st, 2014.
Excellent.
What they've said is, in that piece of legislation, that if it's your primary residence, so you've lived in the property for 2 of the last 5 years,
okay,
and you short sell the property, you will not have a tax consequence.
Okay.
So you can offset it if it's your primary residence and you short sale.
Okay. Now, did they also tie into that bill some the requirement as to what that debt was, if it was original purchase, the loan that you originally purchased it, or if you refinanced it at some subsequent point after you purchased it? Is that also part of that bill?
It is part of the bill, and this gets a little bit tricky. The answer is, if it was purchase money used to purchase the property, you still get the tax forgiveness.
Okay.
If you refinance the property and don't take cash out,
okay,
that refinance money becomes purchase money, and you still get debt forgiveness.
Okay, so let me clarify what I thought I heard you say. So I bought a home for $200,000.
Yes.
It went up to $400,000, but when I refinanced, I did not pull any money out. I only refinanced to get a lower interest rate at $200,000. Now I'm subsequently, a couple of years later, doing a short sale for $125,000, hypothetically. So there's a need for me to complete a short sale. I've got a financial or another hardship. I need to do a short sale, but because I replaced and I only refinanced to lower my interest rate, I didn't pull any money out, I would still qualify. Is that correct?
That is correct.
Okay. Now, is there any way, if same scenario, bought a home for $200,000, it went up to $400,000, and I pulled out $100,000 in cash, is there a possibility that that additional $100,000 could also qualify under this Mortgage Debt Forgiveness Act, or does it not qualify?
The $100,000 additional that you pulled out would not qualify under the Mortgage Debt Relief Act.
Okay, so it would not. Is there any way, if I use that money to, let's say, put a swimming pool in and landscaping in my backyard and a covered patio, I put all that in, is there any way that that money now, because I did improvements to the house, does that money qualify underneath there? Yeah, very complicated questions.
You're hitting on one of the loopholes, which is yes, if the money was used to improve the property, then there's no tax liability on it.
Okay, sounds real good. Well, sounds like your advice, the same advice that I would give to a client, is very well would be very well received. And the fact that the answer is it depends. There's several different layers, can get very complicated, as you were just explaining to us. That somebody should talk with an accountant or tax attorney to really get clarification on that. But if structured correctly, and if you meet all of the requirements, you can complete a short sale and have no tax consequences on that forgiven debt. If you fit into that box.
That's correct. There's actually a lot of ways that you can get the debt forgiven, more than just the Mortgage Debt Relief Act, and that's why we always say consult an accountant or an attorney so they can, if you fall outside of the parameters of the Mortgage Debt Relief Act of 2007, it may still be advisable that you do a short sale because you can take advantage of the tax consequences.
Okay, sounds real good. So this is our continued series and my interview with local attorney Kyle Wallace. Again, my name is Rick Brinkus with Keller Williams Realty, The Marketplace. You can reach me locally here in Las Vegas and Henderson at 702-456-5959, or you can reach me at property@brinkus.com. That's B as in boy, RENKUS.com. Thanks, have a great day. We'll talk with you soon.